Good afternoon, everybody. Today is Thursday, the 24th of May, 2012, and let's take a look at this market here. This is going to be my end of week wrap. I am going to be out of town tomorrow and Tuesday as well, so I hope everyone has a good long weekend. And let's take a look at these markets. The market was up slightly here today. The S&P 500 was up 26 cents, measured by the SPY, and we did hold some key levels in here. Well, first of all, since the last video here on YouTube, the volume weighted average price year to date did hold as support so far, and that adds a little bit of extra importance to the 129.5 level. But don't be too comfortable with that level, because it would still be good to see, I think, a flush out down towards the 200-day moving average. You can see here, let's just look at a little bit closer. It's really looking like a bearish flag on the daily time frame, and it's below a declining 10-day moving average, which has been holding really kind of as resistance here. But today was somewhat constructive. It was positive for the day, and we did pull back and test that 5-day moving average. So we've got some important things going on here, and this is very good because it shows us, yesterday we had a pretty decent rally, and I was telling subscribers we were looking for a pullback down towards the 5-day moving average, and then perhaps we could go push beyond this 133.25 area or so. You can also kind of draw a trend line that looks like this, whatever you want. It's not a precise level, but we do have, very importantly, this higher low here, and something against which we can defend our any longs if that's what you're attempting here. The 5-day moving average has flattened out, and now if it can take out this high, I think just today's high, that is create a higher high with a stop below today's low, that it's likely, highly likely, I think, to take out that 133.15-ish area. And then we've got to look at where does it have the potential to go next. Well, we've got the Fibonacci from the most recent leg lower, so 38.2% retracement will get us up towards this 134 level, and you can see that was a level where we had some prior consolidation. So I don't think even if we get above 133.15 that we're going to see this massive turnaround. We've still got the headwinds against us with the declining 10, 20, and 50-day moving average, and I would still prefer to see a flush down below that 200-day moving average. Let's see what the market gives us, but it's certainly not very decisive in here. This is also something I had mentioned on Twitter. This is the 2-day volume weighted average price, and this is what we were looking at today as potential support as well, because it's yesterday we saw that big rally late in the day, and I said we wanted to see it pull back down towards that level. I was thinking maybe it would do something like this and then kind of come back up to yesterday's high, and then be in a position to break out from there. But we did see the 2-day volume weighted average price hold as support almost to the penny, and that was close to the daily pivot as well, and the 4-day volume weighted average price, which is the volume weighted average price week to date, and of course where we have that 5-day moving average. So this is a very important level, in other words, to put your any longs that you have, that if it breaks below there by more than 20 cents for a half hour or so, then I think the chances of a at least a short squeeze rally would be off. But again, we're playing with mixed messages from the different time frames. That is, the 10-minute time frame, we're seeing it start to neutralize, but it's certainly not bullish. And the daily time frame is still quite bearish looking, and you have to really be careful with your longs here because of that. The NASDAQ was down slightly today, down 0.5%. It's been having a little bit of trouble here this week with the 63 level. 63, that was the highs a couple days ago. Same thing we have in here, though, which is we have these lows, and now another higher low once again. So today's low down to about $61.35. I think $61.35 is probably the key level that we want to see this market hold. We're breaking a trend line, but not quite making it through there. We had the stage 4 decline. This is possibly stage 1 accumulation. but within an overall downtrending environment, it's very difficult to trust that, and most people should not be attempting it. Is my opinion. That is to go long in here unless you have the discipline to get out quickly, and to make sure that if you're trading, you're doing it still with small share size. It's easy to want to go forward, and you feel like you feel like, well, I should be making money here. I'm not getting ahead, but really, some people were tweeting about it as well. Someone with a very good long-term track record, I guess, in a new Jack Schwager Market Wizards book, was talking about the majority of his outperformance. He attributed to knowing when to sit on the sidelines and cash, and this is clearly what I think is one of those times. If we get beyond the highs, the 63-ish level, we've got this prior support right at the 38.2% retracement as well. So it just doesn't look like a good time to be trading, and I'm going to be taking a couple days off. I'm so excited about this market. The Russell 2000 here, we've got an important level put in today at about 75.50. So 75.50ish. This higher low, and you can see these are lines this is what I talk about during the midday videos for subscribers as well, is to kind of see how we're developing with the overall plan that we're talking about. And the Russell had a pretty nice bounce in here. So looking at the volume weighted average price week to date, you can see that we dipped briefly below it, but we're able to recover. The 2-day volume weighted average price held in there, and we're just above that 5-day moving average, which is just beginning to actually rise in here. So 1, 2, 3, 4. Tomorrow we're going to be getting rid of this data. So that means that the 5-day moving average will begin to rise even if this market is flat, because we're getting rid of this old data in here. So tomorrow this 5-day moving average will be advancing. Let's take a look at the SPY for that as well. So that's true also in the SPY, that we're going to see it advancing even if the market is flat, because we're getting rid of this data that was basically below what today's lows were, in fact. So the markets are trying here, but it just remains very unconvincing with such ugly looking daily charts that we're in a downtrend on the bigger time frame. We're going to get bounces, but these bounces are considered guilty till proven innocent. So you can be nimble and make some money in there, but it's not time to be looking for, hey, this is a bottom and we've got to position for longer term moves, because the evidence simply isn't there yet. We had a little bit of a shakeout in the semiconductors yesterday. That is, they gapped down below the prior lows, and we've been battling this declining 5-day moving average. And the key level in here for any rally to potentially take hold is 31.50. If we can get above 31.50, then it looks like we're probably going to be able to rally about a buck up towards about $32.50. We had seen that as a prior support area, and that would potentially be resistance as well. The Fibonacci kind of lines up in there also, 32.30. That is $32.30, would be a 38.2% retracement of that decline from 35 down to $30.60. So they're setting up as possible bounces. I would think that today's low would be where we would have initially want to defend any long position if you're going to take it, but you would want to ratchet that up quickly, because here we have about a buck of potential upside, and if you were to take this market at say 31.50, well, you would have to have your stop down at 30.80, so 70 cents worth of risk for a buck of upside doesn't make sense. What we'd rather see is a rally up, a pullback that kind of tests the 5-day moving average, then it gets to go, and then we could set our stop up at a higher level. That is, if it were to form another higher low. Financials were up a penny today. Still, again, we're below a declining 10, 20, and 50-day moving average. It's looking like a bearish flag. We're below this bigger prior level of support at about $14.40, and then of course we have these other levels up at about $14.90. But a declining 10, 20, 50-day moving average. It's been trying to hold at the 200-day moving average, but a shakeout below it would probably be better to get some emotional selling into this market. But intermediate term, we're seeing a little bit of better signs of healing in here, as it's also holding its 5-day moving average. They just remain very risky because of the bigger picture downtrend. That's really what you have to focus on, and be aware that yes, we can get good bounces, but they generally turn out to be those snowpack bounces, which I like to talk about. That is, late season snowstorm makes the little snowpack chart jump up a little bit, but then it starts to melt again, and just not enough to reverse that downtrend. I hope everyone enjoys their long weekend. I'll be back on Wednesday, so take care. Thanks.